I recently got a comment from a viewer saying that individual stocks get higher returns, mentioning a few, two of which have had a return of 100% or more in just a short time. They went on to say ETFs are boring. Who wants a 20% return? And I understand why he feels this way. AMD and Micron, for example, significant returns year to date. Taiwan Semi and Broadcom have also had strong returns over the last few months, but those individual companies are not the best fit for every investor. So today's video is inspired by the comment and also by another one asking me my thoughts on the ETF VGT, which is the Vanguard Information Technology ETF. We'll also be touching on SMH, the VanEck Semiconductor ETF, funds that will have you on track to get that aggressive growth while not relying on one company. No concerns as to what could be going on 10 or 20 years down the road. First, let's take a look at SMH. And this ETF is up over the last year about 121%. This is why semiconductor investing has become a very hot theme. AI infrastructure, data centers, high performance computing, all through the companies that are held in this ETF. So instead of trying to predict what is going to be the chip company winner, you own all of the major players. This is a more aggressive investment. The momentum is very strong. It's one that I pair with my more basic investments, like those giving exposure to the entire S&P 500 for diversification. Because I do want aggressive growth when it comes to my portfolio. I do want to strive to beat average market returns. And this is a fund that allows me to do that. Now on to VGT, the Vanguard Information Tech ETF. And this is a money machine, giving exposure to software, AI, cloud computing, some of those semiconductor names. And over the last year, this one is up 45%. Now let's take a look at some of the holdings in these two funds. One key difference between VGT and SMH is that VGT is anchored in giants like Apple and Microsoft, which are some of the biggest customers for those semiconductor companies that are in both of these funds. SMH is strictly semiconductors, those companies making the chips, while VGT is a mix of those technology companies. So there are definitely differences here. There are thousands of ETFs and mutual funds to choose from. You just have to decide what's the right fit for your portfolio. Now, thinking back to the companies mentioned in my viewer's comment, both of these funds would give you exposure to AMD, Broadcom, and Micron. Taiwan Semi is not going to be included in a fund like VGT because it tracks a US focused index, and that is a Taiwanese company. But as you can see, it has a heavy weighting in SMH, showing its importance when it comes to those semiconductor chips. So the weightings in these companies are different when it comes to each of these companies. And NVDA is the leader in both. And by the way, NVIDIA's earnings are coming up tomorrow. A $5 trillion company, the largest in the US, that will definitely impact the stock market over the next couple of days. So I'm going to keep on highlighting ETFs that give you exposure to these quality companies because investing is not a one-size-fits-all thing. And I definitely want newer investors, more hands-off investors to know that there is a way for them to get started that might be a better fit than having to research and decide how much money to put into multiple different companies. So VGT share price is about $111. They recently had a share split, making their price even more affordable, while SMH is about $544 a share. But you definitely can buy fractional shares. I did a stretch 10 weeks straight of investing $10 daily into SMH. That was my start back in January of this year of getting my first exposure to it. inside of my portfolio. Now, before we look at some long-term performance of these two funds against each other, I want you to be aware of the expense ratios. VGT is 0.09%, while SMH is 0.35%. So higher fees, a more concentrated funds, and it also does give that strong performance, but may not be what every investor is looking for. VGT is more diversified, will be less volatile, giving exposure to technology, but in a different way. Both will allow investors who want growth without relying on one company. We've already looked at the 1-year performance of these two funds. Now let's take a look at the 5 and 10 year against each other. SMH is up about 389%. while VGT is up 157% over the last 5 years. And then over the last 10, SMH is up over 2,000%, while VGT is up about 829%. So as I always say, investing is not a one-size-fits-all thing. I want you to know that if you're hearing about NVIDIA and Taiwan Semi and AMD, Micron, Palantir, all these different names, you don't have to invest into them individually. If you don't want to, there are other ways that will also have you on track for your portfolio to grow. Don't underestimate consistency, and relying on individual companies means that when there's a pullback, you're going to feel it harder. When competition increases, when there's poor earnings, you'll have less worries, pressure, because the fund will balance for you, removing or lowering the weighting into particular companies without you having to put the work into understanding the technicals, the fundamentals, headlines related to changes in leadership, product cycles, some different things that impact your portfolio. Single stocks can outperform, and I do hold quite a few, but I'm willing to take on that responsibility of doing my research. I'm not emotional when it comes to my individual stocks or ETFs. We went through a rough time at the beginning of this year. Nothing was cut from my portfolio. I continued building, and I'm glad that I did, seeing the gains that I have now. I do not hold a position into VGT, but it is a quality, low-cost way of getting exposure to these tech names. Altogether, I'm creating the balance that's right for me. So I'm going to share my results on a few of the names that we talked about today. Let's start with SMH, the newest edition. I started at the end of January 2026, and I'm currently up 10.2%. I have just 4 shares in my portfolio, but I'm going to keep on building. AMD, I'm up about 92%, Taiwan Semi, 102%, and NVIDIA, about 70%. And these are all investments for me. So I hope you can take from today's video that it's okay to be boring when it comes to your investing. Don't just strive for excitement just for the heck of it. Be responsible. This is investing, not gambling. Know what you're investing into, have a plan, start to finish. I don't want anyone to invest into something that is not a quality company, that does not recover. Always keep in mind that investing and trading are 2 different things. And it takes work, knowledge, expertise in order to be a trader, buy low and sell high. That's not what I'm doing. I'm an investor, creating the balance that's right for me. Individual quality stocks that I'm willing to be mindful of, put a stop loss on when needed. But overall, most of the companies that I'm holding currently are long-term holds for me that I'm being mindful of, but I'm willing to allow for those fluctuations because I understand when times are tough, like we're going through now with things still unsettled between the US and Iran. So I'm getting my exposure to AI, to semiconductors, to cloud infrastructure, technology as a whole. And I'm sure you are also, because these are companies that are going to be found in many of our ETFs and mutual funds. So let me know in the comments, are you team VGT, SMH, or are you buying shares in these companies like NVIDIA, Taiwan Semi, and other big tech names that we mentioned today? Share any questions that you have and let me know in the comments any companies or funds that you want to hear a breakdown on in the future. I am Lisa J. Stocks. Make sure to like, subscribe, hit that notification bell, hype this video, check out my referral links, and another video, which I'll have tagged here at the end. Thanks for watching. Okay, bye.